So, order blocks. Before you talk about order blocks, you have to check one thing or two. You'll need to look at where there's liquidity pools, and that is all the highs and old lows. For example, in this chart here, we had a sweep of this low. This is sell side liquidity, and then before we continued higher. So when you are bullish, we want to see old lows being swept before we start to think of reversal. So when talk about order blocks, I want to look at that candle that took liquidity purged into an old low. That one candle, to me, that is a very high probability order block. So when you look closer here, if I can zoom in like that, so we have this candle. That candle there, the fat down close candle that took liquidated an old low. To me, this one is a valid OB. Yeah, so you see, after liquidity sweep, price came up above this candle that took out the old low, and then it consolidated a bit before the news flash that actually pumped the price higher. And before even you continue, wherever you see some relative equal highs and lows, that is where you should be putting your eyes. Relative equal highs, top center. Yeah, that is more of a magnet. If price is poised to go higher, I want this area to be my target. So after liquidity sweep, a key level here is our old low. It can be sweep into an FVG, a sweep into a balanced price range, a sweep into a breaker, rejection block, all those PDRAs. So now, why am I taking this candle as a high probability order block? We said earlier that a high probability order block has something in it. What is this? That is an FVG. So we have an order block with an FVG that is gives it a higher probability of it to hold price. So this is a reversal order block, and getting in, buying from there, stop loss below the candle with FVG, or 50% below 50% of this order block, or down here where we have the swing low. So those are the three areas where you can place your stop loss if you want to be a bit safe. So the first area is below the candle with that forms, will be the candle that forms an FVG. Let me change this. Yeah, so that is the first area. The second area is 50%, 0.5. All right, 0.5%. What is this? So below 0.5% of an OB of an OB. So below the 0.5% of an order block, or another way is below a swing low or high. Below a swing low, because now we are buying this one specific time zone. So you can place your stop loss below the candle that forms an FVG, this one here, the second candle, 1 2 3, or below 50% of this order block. Somewhere 50%, so you can put it on the lower quad or below this swing low. So those are the three areas that you can, depending on your risk management, of course. So this becomes a reversal order block. Now when price will gravitate away from this order block, what does it leave here? It leaves me with a fair value gap in the form of a BC. This one from here to here. So look at this down close candle here. The three down close candles here. This is a continuation order block. Like that. That's a continuation order block. But again, see when price filled the FEG or BZ and then gravitated above this three down close candle, the next candle that drops into that is now our propulsion block. This specific candle that is here, the down close candle. So you see, came back here, rejected, and then the next candle took a flight to clear those relative equal highs. So a higher probability order block for a reversal should take out an old low or high, and even to make it more high probability, it should have a fair value gap with it. Then continuation order blocks is after they react from a key level like an FEG or an IFEG and such like. So those are the two scenarios and how you can deal with order blocks. The first thing, I love when a candle liquidates an old high or an old low. I really take care of that candle. I don't really care when it will support the price, but when it does, you can see it was so beautiful, this delivery to take out these highs. So all the time ensure that you take care of that candle, that heavy fat candle that took an old high or an old low. Yeah, so that is it. If you have any question, again, you can leave it in the comment section, and then I'll pass through and try to maybe justify if there's an area that you haven't had well. Now, when do you take partials? Because sometimes you want to see price moves a bit, you trail your stop loss, comes back, takes you out, and then you are left wondering what is happening. Take partials or trail your stop loss when price closes above or below swing highs. When you're buying above swing highs, when price closes above here, we don't expect again to come back down, so you can trail yourself to break even or something small as you let the price see whether we can clear those highs. Or equally, you can take partials above here and let something small to run, and at least you can book some profits other than closing it fully here. And equally, you can even close it there if you're okay with your risk to reward. Yeah, so that is it, guys. Remember to give me that thumbs up and press the button. The red button is free like the air we breathe, so that at least we can continue growing together. Anything else maybe you want me to cover, you can just throw it in the comment section, and then it can be easier for me to pass through it and bring a video on the same. So until next time, be safe.